Hi everyone, welcome to my channel. I'm Doris. I'm here to share with you about my stock account and today's market update. Today's net asset of my account is 762,831.91. Today my stock account has fluctuated. Well, lately it has fluctuated recently more volatilely because I've included more leverage on the United Natural Gas. And I believe that the reason that I bought in is because if we just look at its historical performance, that the index has been performing at a historical high, and I think that there's a large opportunity that it's going to rebound. And so let's take a look at the stock market today. The stock market performed generally well, led up by tech stocks again. Dow Jones closed up 0.4%, Nasdaq closed up 1.3%, and S&P 500 closed up 0.96%. Today, the semiconductors closed up 2.1%, software closed up 3.51%, and today, the tech stocks have led the way, while Nasdaq closed more than 200 points. Investors have been focusing on the U.S. earnings and the Fed's interest rate policy outlook, and they have been waiting for the latest inflation data, such as the retail sales and the PPI. On Tuesday, the Dow closed down 524 points, or 1.35%, its biggest one-day drop since March 22nd of 2023, after falling more than 750 points at one point. On the same day, the official US CPI data for January showed persistent high inflationary pressures, increasing the risk that the Fed will change its plan to cut interest rates. After the CPI data, the market lowered expectations for the Fed's first rate cut in 2024 and the extent of the full year. The U.S. Treasury yields surged and major indices fell under pressure. After the better-than-expected CPI data, traders see the chance of a Fed rate cut in May 2024 and falling about to around 32% from 64% before the inflation data. And they expect now, instead of 5, but rather 3 rate cuts this year, for a total of about 75 basis points. The core PCE increase will have to slow to 2.7% in January, but these forecasts are preliminary and will change after the release of US PPI data on Friday. While the January CPI report could delay the Fed's first rate cut from the March investors originally expected, is that market valuations are more in line with fundamentals. The pullback provides a reasonable valuation-oriented opportunity for investors to enter the market. But more importantly, as inflation, interest rates, and earnings still support the rally, we don't think this is the end of the rally. There will be no long-term downturn in the future. The founder of Double Capital warned that the current stock price is similar to the beginning of last bear market. The bull market in the U.S. stock peaked about 2 years ago, but has entered a pullback. In addition, the narrower trend could also exacerbate the risk of a correction. About 51% of the S&P 500 stocks are now above their 50-day moving average, the lowest level since November. The data showed that means fewer stocks have participated in the rally, and the pain will be wider once the market weakens. Fed Chairman Jerome Powell reportedly told Democrats on the House of Financial Services Committee on Wednesday that he refused to comment on the timing of the rate cut, saying a stablecoin framework was needed. Chicago Fed President Mike Mike Goolsbee spoke on Wednesday to calm the market sentiment. He said the market did not have to overreact to a month's inflation data, with the Fed still be able to achieve its target of cutting interest rates to 2%, of cutting inflation to 2%, even if inflation was slightly higher than expected in the coming months. And policymakers should avoid waiting too long before they cut interest rates. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.